Welcome. In this video, Zbcn coin rally has started. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the previous video, we took a detailed look at chart patterns and particularly emphasized that important descending trend structure, which now seems to be technically behind us. The trend line that drew attention at the time indicated that the price had been under downward pressure for a long period. However, the price repeatedly touched this trend line, forming an increasingly tight structure, and eventually managed to break above this strong resistance. Following this breakout, a retest movement, a commonly expected behavior in classical technical analysis, also occurred successfully. The price returned to the broken trend line and tested it as a support level. This retest phase was a crucial turning point in assessing investors' confidence in the market. Such pullbacks after trendline breakouts are generally considered important signals to confirm whether the market has truly changed direction. During this retest, the price found solid support and bounced upward from the level it had previously broken. This clearly indicated that the broken trend line had now started to act not as resistance, but as support. The resurgence of buyers and the weakening of selling pressure during the retest period demonstrate a positive shift in the market. In particular, the buying reaction seen at this level was a promising sign for the future direction of the price. From this point on, a careful examination of the price action shows the beginning of a highly positive and stable uptrend. The price has now broken free from the descending trend that once constrained and pressured it. The breakout of this technical structure, followed by the retest and the subsequent upward momentum, typically points to a lasting trend reversal in the market. Especially with the increase in volume after the rise and the re-entry of buyers into the market, it becomes clear that the potential for the price to reach higher levels is strong. For investors in particular, this kind of breakout retest uptrend trilogy offers a classic and reliable strategy for opening positions. The price has now moved outside the previous limiting structure and is creating a new space for itself. This indicates that the room necessary for the formation of new high points in the future has now opened up. Furthermore, the fact that this upward move is happening with sustainable momentum proves that stability is being re-established in the market and that the upward potential continues. At this stage, another key factor that investors closely monitor is the price's ability to break through certain resistance levels during its upward movement. If the price can now easily surpass critical levels that it previously failed to break multiple times, it indicates that buyers in the market are now stronger and that the likelihood of the uptrend being sustained has increased. These types of structural breakouts are crucial in determining the direction of the market, both from a technical perspective and in terms of investor psychology. Currently, the price has successfully completed the breakout and retest process observed in the past. This paints a very positive picture from a technical analysis standpoint. Especially the upward breakout of the trend line and its subsequent test as support paved the way for the price to make further upward moves from this level. This process serves as a valuable confirmation for investors conducting technical analysis. Moreover, the positive sentiment emerging in the market may also attract new investors, because such a technical picture reinforces investor confidence and increases market interest. The price has now exited its previous weak structure and entered a strong uptrend. This indicates that the market structure has changed in a healthy manner and that strong buyers have taken control. But we can't rely solely on trends to make decisions. Let's now look at other metrics as well. Stay tuned. According to Elliott wave theory, when we look at the current position of the market, it appears that the price is in the process of completing the second wave structure and is at the threshold of a highly critical phase. This corrective second wave, which follows the initial wave, is a stage that is closely monitored by many investors and analysts. This phase is generally characterized by profit-taking and minor correction movements following the initial upward wave. However, this correction process should never be interpreted negatively. On the contrary, the second wave is a period during which the market gathers strength, buyers reposition themselves, and the groundwork is laid for the next major price movement. At this point, based on the chart structure, the correction may be in its final stages. The price holding at strong support levels and the limited nature of the pullback suggest that the market is preparing to transition into the third wave. As is well known, the third wave of Elliott wave theory is the most dynamic and powerful phase, typically offering the highest profit potential for investors. During this wave, prices tend to move upward much more quickly, with higher volume and stronger conviction. In technical analysis, the 1/618 Fibonacci extension level is often used as a minimum target for the third wave. However, depending on market momentum, this level can extend higher, such as to the 272 level. The short-term consolidation process occurring in the second wave is actually forming a strong enough base to ignite a new rally. The current sideways movement in price reflects a period where buyers and sellers are balancing out, positions are being restructured, and market uncertainty is starting to diminish. The decreasing selling pressure during this phase indicates that buyers are gradually re-entering the market, and the force necessary to push the price upward is beginning to build. Additionally, during this process, very positive data is starting to emerge in terms of chart patterns and technical indicators. If the price successfully completes this second wave and starts to show the first signals of a third wave, it will then become inevitable for the market to test much higher levels. Specifically, the 1618 Fibonacci extension level stands out as a reasonable initial target for such an upward movement. However, if the positive sentiment in the market continues and investor confidence keeps growing, there is a strong potential for the price to surpass this level and reach higher points like the 2272 extension. If the third wave begins, the upward movement in price is expected to be clearer and more decisive. During this wave, an increase in volume, technical indicators turning fully bullish, and a complete shift in market psychology to a positive outlook are typical developments. Especially the strong entry of major investors at the beginning of the third wave can significantly accelerate the upward movement of the price. This could lead the price not only to short-term targets, but also to a broader uptrend that reaches medium and long-term resistance zones. At this stage, another key factor that investors should carefully monitor is how well support levels hold up. The area where the second wave ends usually forms a critical base for the beginning of the third wave. If the price starts a strong upward move from this level, it would be a positive signal not only in terms of technical analysis, but also in terms of overall market sentiment. During the third wave, the price can surpass previously challenging resistance levels much more easily. The rally expected in this phase of the Elliott waves will provide investors not only with technical gains, but also with a psychological advantage. Because throughout the third wave, new investors typically enter the market, buying orders intensify, and the upward trend gains broader acceptance. This both increases market volume and enables the price to move faster. The MACD is one of the most reliable technical indicators that measures market momentum and helps to predict the direction of the trend. This indicator works based on the difference of two moving averages and provides traders with both buy and sell signals. Looking at the current chart structure, it is noticeable that the MACD lines are still below the zero level. However, the most notable and promising development here is the potential for an upside crossover between these lines. This is often interpreted as a positive reversal signal in the world of technical analysis and can often be a precursor to strong upward price action. When the MACD lines tend to cross below the zero level, this usually indicates that a resistance to the negative momentum in the market has formed and the seller's strength is starting to weaken. In this context, the current structure can be seen as a positive sign that the decline is slowing down and buyers are preparing to re-enter the scene. In particular, the upside crossover of the MACD lines suggests that momentum is shifting, and potentially the start of a new bullish wave is very close. We should scrutinize MACD crossovers carefully. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.